This week's retail earnings were all over the map, with many higher-end retailers posting better results than mainstream retailers like Target and Walmart. It's bringing in the question of whether the consumer is actually trading down despite this rocky economy. Let's bring in Michelle Meyer. She's chief economist for the MasterCard Economics Institute, and Jerome Martis, director of consumer research at Refinitiv, to discuss what they're seeing. Jerome, I'm going to start with you. It is hard to sum up what we saw this week from retailers because it was a bit all over the map. But can you help us try to find some themes that we saw this week and what that might inform about what's to come next week from the retailers that will be reporting?
Absolutely. It's been an interesting week, Courtney. And the discounters has been the one sector where analysts has been the most bullish. But within that sector in itself, there's a clear distinction because analysts have been raising their estimates for the discounters that sell gasoline. And that's pretty much why Walmart has the upper hand on Target. Walmart his membership income has risen 25.6% compared to a year ago, during a time when that membership saw a record count, as opposed to Target, who actually missed same-store sales estimates. And we're seeing that those projections even for the third quarter and the fourth quarter. We're seeing that the middle-class consumer is looking for value. They're cutting off those Netflix subscriptions and instead getting a membership at Costco, Sam's, and Walmart, in order to save money at the pump. And when you dig deeper into the numbers, we're seeing that they're parking their cars after pumping gasoline and they're going into the stores. And that's translating into stronger sales within the stores themselves. And that's what we want to see, the strong same-store sales, and that the gasoline prices is the key that is luring in those shoppers at the discounts that sell gasoline.
Yeah, that's a good point. I was actually just looking up stock performances over the last week. Walmart up 3.6%, to your point with the Sam's Club and the gas selling. BJ's Wholesale up 8%, Costco up 2.4%. Target, though, down 3.2%. Michelle, if I can turn to you, and we can talk a little bit about the idea of the trade down. Target said that they're seeing more interest in some of their private labels. They didn't break it down as far as Walmart went as to say that their private label food was actually growing at 2 times the rate at which they saw in the first quarter. And you heard there from my interview from CEO Doug McMillon saying how the higher end consumer is actually responsible for 3/4 of the growth in food. Does that worry you at all about the high end potentially cracking?
So look, I think what we're seeing now for the consumer is a consumer that's been faced for some time with relatively high prices, in some categories, extremely high prices. So consumers are making those decisions. They're trying to weigh their options. You walk into a grocery store, you walk into a big box retailer, and you're going to decide. You're going to look at the price. You're going to try to understand how much that has increased relative to the last time you were in the store. And you're going to think about how much you want to spend when you're walking out of the store on aggregate. And that makes a lot of sense. It's perfectly rational. The consumer has been, seeing these high prices now for some time. And it's shocking because the last several decades was all about disinflation. It was all about discounting. It was all about these deals. So it's a different mindset for the consumer that they have to react to. And at the same time, they're also seeing changes in their priorities around how they want to spend. In the post-pandemic period, right after COVID, you saw such a big influx of spending on goods, particularly these big ticket items related to the house. Now you're seeing a lot more on necessities, in part because those prices have increased, but also very much on experience-based spending and all of the items that go around with it. So it's a consumer that's making choices and trying to navigate this economic environment.
It's so interesting, Michelle. It feels like just a couple quarters ago, a lot of the retailers were sort of bragging about their pricing power and their ability to hold prices on the consumer that was so strong coming out of COVID. And now here we are in this period of high inflation, and they're having to turn to discounts. With Jerome is sort of where I want to go with you next. We've got really bloated inventory. Some of it may be done on purpose to bring in more inventory ahead of the all-important end of the year for back to school and holiday. So they're not in the same position that they were last year with sort of empty shelves during that time because of supply chain disruptions. But you've got Kohl's inventory up 48%, Foot Locker up 52%. They're having to discount some of that wasn't planned, which is compressing margins. So I guess when you put that together, what does it mean for the back half of the year, for the profitability of retailers, and then what consumers can expect when it comes to pricing? Will there be more discounts?
Well, in a collaboration with StyleSage, Refinitiv discovered that indeed in the second quarter of this year, the amount of merchandise on sale did go up significantly compared to the year-to-date average. The average discount did as well. However, going into August, which is the first month of the third quarter in the retail space, that average discount has come down to 35.2%. And this is key because this is still below that pre-COVID environment, the 2019 pre-pandemic era, when everything was discounted and the average discount was above 40%. So what's going to happen is the following. We saw that Target already had to make some sacrifices in order to move a lot of that inventory. Yes, profit margins did take a hit, but if the retailers continue to do so, and this is the mark of the first month of the third quarter, then what we can expect is that we will have a decent holiday season with good average discounts.
Okay.
But if, however, they don't, then we are going to go into a promotional era again as the pre-pandemic era.
Certainly a lot of questions. Michelle, here, before we go, I do want to ask if you have any concerns about the broader economy as we're starting to hear a little bit more about layoffs. Wayfair today saying they may be laying off 900 workers. Walmart went through a couple hundred for corporate restructuring earlier. Does that give you any concern about what might be happening in the labor market?
Well, this is an economy that's in the process of rebalancing. Just the conversation you had before about starting to see unwanted inventories, that's really indicative of how the economy is shifting and changing and responding to this post-pandemic period. So to me, when you look at what's happening in the economy, you see certain sectors like the housing market, where most data suggests it's already in a contractionary territory. Autos, other types of big durable goods, certainly seeing a lot more weakness, and presumably that's going to spill over to the labor market, and that's what's happening. That's what you're seeing in these reporting. In terms of the broad economy, it's more resilient. You still have a lot of shock absorbers out there. If you look at the last jobs report, we had over 500,000 jobs created. Will it moderate? Sure, that makes a lot of sense, but will it be an acute reduction in the labor market where you see, widespread layoffs? I don't think that's around the corner. It's a more gradual adjustment in the economy.